Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has somewhat stalled after posting a fresh 3.5-year high last week around 71.5. And from the start of this week is on a softer foot as another busy week looks ahead. That is at the RBA minutes, the wage price index and the labour force report. While the US faces a shortened week with markets closed on Monday for President's Day, all eyes will be on, besides the RBA minutes, the FOMC minutes, and also the PCE inflation gauge, which is at the end of the week, which could give some timing of the Fed's cut as lingering uncertainty over the US monetary policy and leadership continues. Also, the market's a little bit sensitive over the Iran-related headlines and no doubt will cause some commodity stir. Looking at the technicals though, they have buckled, so let's see if we can see a further slide towards 70, 35, 45 and a cap around 71.5 as previously seen last week. As the dollar index sits around 96.80, further weakness may be seen for the start of this week for euro, but as the US is out for President's Day, so it might be a little bit subdued, but likely to pick up later in the week when we get the FOMC minutes. And also the Eurozone gets the flash PMI as an early gauge on growth, and also some Fed speakers and also Iran related headlines that could give further volatility. Looking towards the bottom side of the range, seen around 118.35 to 45 with a cap around 119.5. Dollar yen, well, the market's trying to recover in front of that key zone, which is around 51.5. Given that the market is attempting to recover, we've got an inverted hammer here that would possibly give us a move back to 153.65. But do be on your guard because we could be looking for this move as the next downward challenge and maybe eventually taking out 151. I am still a bear when it comes to dollar yen, and I keep continuing to see these bull traps. Until that changes, my view holds. Looking at sterling, well, the market's still a little bit mixed, but eventually finding a little bit towards the upside when it comes to today's price action. Looking ahead though, I would like to see a little bit more gain in the technicals, and if so, could see a rally on to 137. Support seen roughly around 135.80 like previously found in demand. Commodity, while we're still holding above this broad uptrend, that is as deep as 4,600. Nevertheless, the market is likely to find bullishness again, and that is towards the region of 5,000 or even on to 5,200. Technicals have buckled somewhat, so keep an eye out for the dip, but bargain hunters are likely to be lurking. Oil, well, the market is respecting this level around $62 a barrel. Let's see if we can get a bounce, and if so, looking back to, I feel, with a target of around $66 for this week. If you do see a break of 62, then that would negate the top side and reopen the downward move to 60.5 as a potential target. Well, that's about it. Thank you for joining me. As always, look out the intraday report, and I hope you enjoy the great start to the new week.